Hello and welcome to The Trade. Before we get into the charts, let's have a quick look at what happened on global equity markets. With a mixed session overnight, investors searching for direction in the absence of US government data, adding to the confusion for investors on Wall Street. More conflicting commentary from Fed officials over the immediate path of interest rates. Now, despite this, the S&P 500 and NASDAQ ended higher with more AI deals fueling gains, but the Dow was off by 0.5%. Amazon struck a $38 billion deal with OpenAI to allow the ChatGPT maker to run and scale its AI workloads on Amazon Web Services cloud infrastructure. Nvidia shares gained after President Trump said the AI chipmaker's most advanced microchips will be reserved for US companies and kept out of China and other countries. And shares of the Australian-based AI cloud service provider Iron surged after signing a multi-year GPU cloud services contract with Microsoft worth around $9.7 billion. Tesla, meanwhile, hit its highest level in 10 months ahead of an upcoming key shareholder meeting that could determine CEO Elon Musk's $1 trillion pay plan. And Kimberly-Clark shares went the wrong way after it was revealed the consumer goods company will buy Tylenol maker Kenvue for more than $40 billion, and Kenvue shares jumped on the news. Let's get into the charts now with Peter McGuire from trading.com and kick it off with sterling. Good to see you, Pete. We've got a BOE decision this week and they're facing a very finely balanced decision here.
Absolutely, Juliet. Lovely to see you. I tell you what, it's going to be a tough one for them. And as they lead into, the Christmas period, we can't really see any form of, as far as probability of keeping rates where they are. You've got that meeting on Thursday, the Monetary Policy Committee, and the probability of 70% of keeping rates unchanged at 4%. You got the pound plunged to a 6-month low, Juliet, at 131 on Friday and failed to close above the key level of 131.40. So it seems to be downward. US dollars having certainly a fairly solid and, a lot of momentum move to the upside. So that's impacting where we see certainly pound versus US dollar.
Indeed, and that of course is playing into a lot of the other crosses as well, particularly when it comes to the euro. So it's dropped to a 3-month low here. What are we seeing?
Yeah. Well, when you're seeing at 115.10, Juliet, euro extends a 1.3% pullback from the descending trend line. It's got a 4-day sell-off and it pushes below the 20-day simple moving average. Momentum indicators support bearish bias in the short term, and the euro is losing steam. It's as simple as that. Indicators pointing towards a bearish bias as we move forward, and the pair is still trading above its 200-day simple moving average, suggesting that the downside risk may be limited if it manages to stay above the key 114.90 to 115. But I think that the US dollar will continue its up leg, so in turn I would suggest the euro will probably come under, maybe some more pressure, maybe a 113.50 sort of number.
What about some of the safe havens, particularly when you look at the Swiss here, because we've seen some deflationary pressures here in Sweden as well.
In Switzerland. Yes, absolutely, we sure have. And, when you're looking at that franc, 0.8081, it edges higher above a 3-week close of 80.50 and extends its 4-day winning streak. So the breaks above the medium-term descending trend line, momentum indicators provide mixed signals. But where it's rolling at the moment, I think to sum it up, the weakness following disappointing Swiss CPI data, Juliet, which revealed stronger than expected deflationary pressures in October. And so where it rolls, I would think the key moving indicators still below the range ceiling. A decisive breakout above 81.50 is needed to shift the broader bearish outlook to neutral. So keep an eye on it, but I think it could be range bound over maybe the next couple of weeks.
All right, from the Swissy to gold, gold bulls, over and out now. Have we seen a top for now?
No. I don't think so. It had a 10% pullback, and every time it does, if you look at the historicals, it comes back harder than ever. Let's look at some big fundamentals, Juliet. Central bank purchasing at unprecedented levels. First half of 2025, 23 countries increased their gold reserves. Central banks are now on track to buy twice the annual average seen between 2011 and 2021 for the 4th consecutive year. And central banks already bought 1,080, 1,051 and 1,089 tonnes of gold in 22, 23 and 24 respectively. So we had a period, Juliet, we had central banks selling between 1989 and 2010, 21 years solid selling. Now they've been buying since 2011 and it's game on. So I think you're going to see continued uplift as far as gold and certainly for its little brother silver. And I think its best days are ahead of it. I know that's a broad statement and it may be too bullish, but I'm on that train.
And Pete, I just wanted to get your thoughts as well on oil, particularly amid OPEC Plus's moves to try and rebalance the market.
You know, Juliet, what we're looking at, I'm not too worried about the lead up to Christmas. It's certainly Q1 where that's going to roll. We've got to see what's happening. The big engine in the game is certainly going to be, as well as OPEC Plus, what's happening as far as US and the drill baby drill mantra. So I think that where we look into December, I think it'll be softer prices rolling into Christmas, and then that's going to be good for inflation. And then as Q1 rolls forward, I want to see what the thoughts are as far as the implementation of that and whether we're going to see the glut that everyone's, I think, appreciating, how big that's going to be to the market. And if it is, I think there's going to be, again, more pressure to the downside for crude. And yeah, it's a good market to short. It's certainly been very active over the last couple of weeks and it never fails to disappoint, does it?
It certainly doesn't. Peter, neither do you. Thanks so much for your time this morning. Peter McGuire from trading.com. That does it for this edition of The Trade. Be sure to join us next time.